technological changes in a financial system based upon technology is like a mouse starving to death because someone moved their cheese. With that as a theme, welcome to our Zoom web series hosted by One Tree Hill and PMS Cart on the Juggernauts, conversations with uncommon and curious fund managers. We have with us today one of the most well-known faces in the industry, the founder of Zerodha and True Beacon, Nikhil Kamath. Hi, Nikhil. Welcome to the Juggernauts.
Hi, Jay. Nice to be here.
Great. If you're ready, Nikhil, what we like to dive into is what we call the Machine Gun 15. It's a fire round of questions where we hope you have as much fun as we do. Right?
Sure.
If you're ready, you're happy to dive in.
Yeah.
Super. What do you think is the motivation for today's investor?
Alpha, like always. I think the yield on capital.
And across assets or more concentrated now?
Concentrated by virtue of what is happening in the ecosystem. Interest rates going down, real estate returns drying up, make it more concentrated in equity, I think.
Sure. Our government stimulus has been now around for, close to 2 months. Do you think, has it done enough?
Well, it's a topic I'm hard pressed to comment about because you don't know what you can say and what you can't. But I would say it's done something to help. I would give more love to the regulator because they have put out a bunch of rules and regulations and tweaks in the ecosystem which have helped. But I think they've started walking on the right path as a government, but there's plenty more to do as a government.
Okay, so is there a silver bullet remaining from the government or the regulator side, or multiple silver bullets?
Multiple, I think. From the back of my mind, because we are in the asset management industry, I would say call for pass-through taxation for Category 3 AIFs, to rationalizing the STT charged on stock transactions, to even things like buyback tax. There's plenty to be reworked in many domains. So they have many bullets left at hand.
Okay, and do you think they will do this as fast as you and I wanted to?
I hope and pray that they do. Especially, I think if I have to put two things on top of my priority list, it would be pass-through taxation and revoking STT or rationalizing STT.
Got it. And sort of, talking on these silver bullets and money in the system, is the NBFC problem as difficult as it looks?
I think it's more difficult than it looks. We'll probably know for sure after the moratorium as to, who stands where, but it is a scary situation. I think I am really worried about it.
Okay, fair. That's fair. Running Zerodha, you obviously have a lot of generic information. So where do you think the demographic of the Indian sort of trading community is headed? Currently, if I have my data right, 3 to 4% of Indians sort of have a unique PAN card which sort of invest in the markets. Where do you see this number in 5 years or 10 years?
Well, this number is set to burgeon. I mean, it's a number which will grow very quickly. This number in America, for that matter, who has direct or indirect access, is upwards of 90%. Right. If I were to put a timeline to it in 5 years, the younger community, Jay, is a lot more financially savvy, a lot more financially literate, and they are coming into the equity markets a lot more than their predecessors or their previous generations did. So I would call for this number to grow to at least about 15% in the next 5 years. I think that would be a fair assumption.
Wow. Okay, that's great to hear. And sort of something that I think you focus a lot as Zerodha is tech, right? Outside of India, there seems to be a sort of a big move towards technology, right? India will catch up. Will there be more Nikhil Kamath in the next 5-10 years?
Well, I think it's beneficial to the ecosystem overall. And I think the spurt in innovation and the whole startup ecosystem in India over especially the last 7 or 8 years has been incredible. And at this point in time, it has become very cool to be part of a startup or to work on new products and innovate, and the whole dropping out of college and all of that. So as long as this sentiment prevails, I'm sure it will happen.
Okay, fair enough. And sort of, on that question, what do you think is the next toy? Is it pharma or is it data or is it tech?
Uh, there is something that we can attribute to each of these domains. There is plenty that has to change, but for me personally, I think it's education. I think
Okay,
the way we educate our youth today is really outdated. I think our system of pedagogy much reflects how education was during the Industrial Revolution and when people would work in a factory assembly line versus an environment today where information is available very quickly for anybody who wants to go Google it and find it. I
sure.
think we have to change our education system structurally, drastically. I think a lot of disruption will happen there. Even the college system and degrees and all of that.
Absolutely. And I think we're already seeing that, obviously COVID has faced a lot of the education system or the stalwarts or even in education system to sort of change and make amends to the way they are sort of imparting that and what they're imparting more than anything else. Super. The question on everybody's mind, what is driving the markets upward? Is there any other reason apart from liquidity to sort of, tie up what is happening on the ground to versus where we are seeing the market? Are we seeing a buying panic?
Uh, so I'll be candid about this, Jay. Liquidity, of course, is primarily a big factor in why markets are going up. I think real estate yields in India, where we typically kept 60, 70% of our savings as a middle class, middle income household, are not yielding much. I think we get 1.5%, 2% real estate yields. The newer generation, especially people in the 25 to 33 age bracket, are now thinking if I can rent a home at 1.5%, why am I buying a home and borrowing at a much higher rate of interest and doing that whole thing? It doesn't make a lot of logical sense.
Sure.
Bank FTs going down is another big factor. People don't want to leave money in banks anymore, but also I would add to that the tax return. We get long-term capital gain tax at 10%. Everything else in the country is taxed at much higher. That is driving money into the financial markets as well. But outside of all of this, I think people are coming to terms with the fact that coronavirus is here, or the pandemic is here, and it is likely that all of us, if not all of us, a lot of us will get it. But they're also coming to terms with the fact that the fatality rate being as low as it is, 1.5 or 2%, in a post-pandemic world, people still need manufacturing, consumption will pick up again, people need to travel, businesses will make a rebound. Sure, it won't be the same businesses of yesterday, and we will see significant rebalance towards newer age businesses. But markets tend to be forward looking. They don't react so much on the news coming in today, but what they perceive will happen over the next 12, 24, 36 months. I see a lot of that happening right now. Not just in India, but across the world. Probably most pronounced in America by how we are seeing the technology stocks and the NASDAQ do. But I think the same trend is happening here in India as well.
Okay. So and sort of, staying on that, and you made a comparison between the US and India, etc.
Mhm.
How long do you think India will remain an emerging market?
Uh, a lot to do with how our governments function over the next decade.
Okay.
Uh, I would say the silver lining is in many sectors. I think we are at par, if not better than them. If I have to take the example of banking, I think in terms of compliance, governance, I think Indian banks are at a higher pedestal than American banks. And even innovations in banking like UPI have been incredibly more efficient than whatever the peers in America might have. So there will be sectors in which we overtake them and not just catch up.
Right.
And to figure out when we will move from an emerging economy to a developed economy, I think by factor of how many people we have in this country, it will be much longer and harder.
Okay.
But in terms of industries evolving and competing globally, I think that will happen much quickly, much more quickly.
Super, super. So, and sort of continuing with that, where industries come in,
Mhm.
which balance sheet do you think is the most stretched right now? Is it the government? Is it the corporate? Or is it the individual?
I would say corporate, and then in corporate I would like to segregate it to a certain sector or maybe a combination of sectors. I would say where we are seeing the most pain right now is obviously the travel, the food and beverage industry, the real estate industry. I think there are certain sectors right there which are in a lot of trouble.
Okay, okay. Uh, Nikhil, you and Zerodha have been sort of compared to sort of Robinhood, right? And they call it the Robinhood of India of sorts.
Right, right.
Uh, how do you see yourself?
Yeah, firstly, I should say we started like 5 years before Robinhood did. And I think, well, Robinhood is doing extremely well. I would say the comparison is Robinhood is more focused on the first time investor, whereas we are an ecosystem for a more professional investor trader. I think they are vanilla when it comes to things like the kind of tech tools that we have at offer. So that would be the differentiation, let alone in terms of scale and everything. If I had to, uh, a top line differentiator between us and them is they are for first time investors and we are more towards the professional and investors who are graduating in their own life cycles.
Sure, sure. And sort of, in your entire experience,
Hmm.
you have come across various investors, traders.
Hmm.
What is that one thing that people across time have always gotten wrong or have a misconception about?
Well, I think people in the trading community often believe that somebody else knows more than them and somebody else knows which way a stock will move. Never true. I mean, if if people on TV or people who are messaging you or all of these people knew what is going to happen in the future, they would not be spending time messaging you. They would be, spending time allocating their money and making more money out of it. So I think people should not fall prey or fall victim to things like tipsters and people who are saying buy stock at 40 and sell it at 60, people who recommend penny stocks. I don't think this has ever worked in our past, nor does it look like it'll work in the future. Uh, Retail investors would be better advised to stick to large cap blue chip companies which have a certain standard of compliance and governance which is at play,
Sure.
and do their own fundamental research and invest in industries they believe in versus hearing what somebody else thinks they should do.
Okay, fair. And lastly, what is one thing that people don't know about you, or most people don't know about you?
uh, Most people don't know about me. I think I'm a very pessimistic person. It doesn't show very often, but whenever I look at a situation, I think I approach it in terms of what is the worst that can happen versus being really optimistic and hoping that it works. Yeah, I would say
Okay,
that.
okay. Super. That's the end of the Machine Gun 15. I'm happy to say that you've come up with flying colors and sort of your coffee with current hamper should reach as soon as we reach sort of unlock
Uh,
10.0,
mm,
whenever that happens. But sort of let me get a quick question on that. When do you think this lockdown and unlock is happening? Where do you think it's
mhm.
headed, especially now that we are hearing that towns are moving from urban areas or metro cities to the
Mhm.
more tier 2 and tier 3 towns where we are seeing a lot of increase in cases.
Right. So, Jay, my personal opinion of this is herd immunity is the only way forward. Uh, I think there is no other way to, even if there is a vaccine, to reach 130 crore people who are in our country is going to be incredibly hard. And for the government to be able to spend the kind of money to even make these vaccines or import these vaccines is going to be very, very difficult. I don't know if these numbers are right, but I've been reading in the news that they tested a slum in Bombay and there was 20% of the people had antibodies. They did a test in Gujarat and 30% of the people had antibodies.
Sure.
I think the natural progression will take this up to 60, 70%, where we will have some form of herd immunity. And I think that is the only way forward. It might not happen in the next 6 months, it might take 8 months, 12 months. But things will gradually open up through that process. And eventually, I think that is the answer.
Okay, fair. And if I could take you sort of 15 years back, 20 years back,
Mhm.
what was your first interaction with the markets? Did it just happen by chance that you came to Bombay, went to the BSC and saw these fancy tickers and said, let me figure this out and, make some money out of it? Or what was your interaction with the markets?
Sure, sure. So Jay, I've been doing exactly the same job that I'm doing today for about 16 years now.
Okay.
So it's been markets and trading and investing and all of that. The first interaction happened maybe when I was about 16. I had a brother, Nitin, and my dad who had some kind of exposure and they had trading accounts and stuff like that. I think picked up from there and then, borrowed their trading account to kind of use it because you can't get it when you're under 18 years of age. And that's when it started.
Should we be editing that?
No, it's fine. I've done many stupid things like that. I don't know how much you'll have to edit them. So
Excellent.
my first job, I quit going to school when I was about 15, and
Okay.
my first job was in a call center where I'd work nights, and I joined that company at 17, even though you're not allowed to, have full-time employment under 18. So
Sure. Sure.
plenty to edit.
Okay. So we'll just keep it in, make for good
Yeah.
material. But sort of, now moving on to what you are currently trying to do uh,
Hmm.
with investors via True Beacon, which,
Hmm.
as you mentioned, is a Category 3 AIF.
Yeah.
You guys have done well in the short period that you guys have been around. I
Yeah.
believe close to a 26% outperformance since inception.
Yeah.
If I could ask you to sort of pinpoint those two, three edges or USP that
Hmm.
sort of a True Beacon brings to the table, because clearly you are trying to do something different in the industry.
Yeah.
If you could sort of elaborate on that, that'll be great for our audience.
Yeah. Sure. So, Jay, I'll give you the backstory first. So, I mean, a few years ago, Zerodha had done well. We all had made a little bit of money. And I was trying to personally allocate my savings onto a private bank. Uh, the thing I realized when I was trying to do that is wealth advisors and managers for ultra HNI brackets are extremely expensive and very, very inefficient. So when I was trying to buy a wealth product from my private bank, I had to give him 1 or 2% just to sell me the product.
Sure.
After he sells me the product, the fund manager would charge me a setup fee. He would then charge me a recurring 2% a year, immaterial of if he does well, he does not well, if I lose money, make money, doesn't matter. Then the money would be tied in. It would be a close-ended fund wherein I can't take out the money if I need it over the next 2 years, 3 years, whatever the time frame. And when I do take out money early, there would be an exit load. So I'm giving my fund manager, if I gave him $100, he's only getting $96.
Sure.
And then for the next 10 or 20 years, he's going to keep charging me money even if he doesn't perform for me. Uh, so this industry had not changed for a decade or two. And there were no client aligned companies wherein they are only set to benefit or have a revenue stream if they do well for the end user. That was the use case. So with True Beacon, if you put in $100, all $100 goes into the fund. We don't have middlemen, we don't have distributors, it's only word of mouth. If you're
Wow.
happy, you talk about it, and then the new investor comes in. We don't have a setup fee, we don't have an annual fund management fee, we don't have an exit load. It's totally open ended. You can come in any day, you can go out any day without paying any kind of a fee. The only thing we decided to charge as True Beacon is if you put in $100
Sure.
and the 100 becomes 110, at the end of the year, we'll charge a 10% carry or we'll charge one as fee. So
Okay.
we're trying to change the model to make it very client aligned. It's a big risk for us to take because if we don't make money to the clients for 3 years, we end up with zero revenue.
Sure.
But we're banking on the long term story of India. We are betting on the fact that clients will be able to discern, people are becoming more financially savvy. They'll be able to discern which product is efficient and why. And we are a long short fund. So we have two buckets in the fund, one which is long only, which is about 60%. The other 40% is a long short fund, which does well in times of volatility. So it's a very conservative fund relative to the other peers in the market right now. while still aiming to achieve about a 6 to 8% outperformance on the Nifty. And we don't do any mid cap companies or small cap companies. We stick to the Nifty stocks only in the long only bucket and the derivative universe, which is again the 150 largest companies in India. So many efficiencies. We have picked out each thing we thought was wrong. We have changed it. Honestly, Jay, we are not thinking about this in terms of how we are going to make money, none of that. The idea is to change something in an industry which has not changed for a long time, bring in all these efficiencies that we think we can bring in and see where this company can grow from there.
Fantastic. That that's good to hear, and sort of being a wealth advisor, a wealth manager as well. I know exactly where you're sort of coming from.
Yeah.
Where
Yeah.
at the end of the day, the client needs more often than not are not aligned to what you're trying to sell to the client. Fair. And you also mentioned in this, the long shot piece is very interesting to me because I manage one of India's largest long shot fund at Edelweiss.
Oh,
And if you could elaborate, because it's sort of misunderstood, what
right.
the long shot sort of bucket does. How
Right.
do you land up making money, or how are you expected to make money in the long shot
Yeah,
bucket?
sure. So typically, I think what a retail investor or a HNI perceives when they hear long short is I think the assumption they make is they buy companies which are strong and they short companies that are weak and they hope to make some kind of a difference there.
Sure,
So our ideology with long short is completely different. I think one of our biggest USPs is how much we allocate to the long short component versus the long only component. So we might have a 60-40 ratio between the long only and long short on average, but there will be times when we take the long short to 50 and the long only to 50, or the long will go to 80 and the long short will come to 20. This based on how we feel the markets will do over the short run.
sure,
But a majority of the strategies that we implement are things like pair trading, mean regression strategies, delta hedging strategies, strategies which do well typically in times of volatility. And if I have to even break that down and give you an example, a trade which did very well for us is buy Infosys short TCS, which we did around the whistleblower news which came out a couple of quarters ago.
sure,
Why we entered the trade is we tracked correlation between the two companies historically. We saw a significant divergence. We broke down the Infosys whistleblower news. We thought about what the claim actually was. The guy was claiming that in one quarter, $50 million has been wrongly accounted and stuff like that. And we then thought about how much impact can this have towards long-term earnings of Infosys, and then initiated the transaction. So stuff like that. Yeah,
super. And so, if I have to just put in one more point, is this more quant driven? Is it discretionary, or is it a blend?
it's a blend. It's a blend. Yeah,
Okay. Okay.
yeah,
Fantastic. Fantastic. I think you guys are onto something different for sure. Not a lot of people doing this and giving it in a structure where you
yeah.
get these multiple buckets under one umbrella for sure. That's great
True,
to see,
true.
Nikhil.
Mm,
One of the
thank you.
interesting things, and I know you're quite active on Twitter. Um, where is our regulation headed? Right, every day there are these three pieces of information that comes out
Mm-hmm,
from SEBI. They're
mm-hmm,
clearly trying to change a lot of things,
mm-hmm.
and trying to maybe stay ahead of investors, of traders, of platforms, etc. What has been what do you think is the end goal for the regulator? Is
So,
there an end goal?
so Jay, the thing with the regulator is what they have actually implemented. Like, 9 out of 10 things have been good for the investor. Like, reducing leverage in the market, good. Increasing spread benefits, wherein you require low margin if you have a hedged position, great. Bifurcating client funds from broker funds, amazing, had to be done. Increasing reporting on a daily basis, wherein not just at the end of the day, but even on an intraday basis to make sure client funds have a certain amount of hygiene maintained to them. All great. Going after tipsters, penny stock advisors, all of that, brilliant. There are one or two things which they have said recently which might hurt the industry in the short run. I'm talking strictly about not being able to use the money the day you sell the stock and stuff like that. But the good thing is the regulator seems open and is willing to have a dialogue. Probably will rationalize it at some way in the future, but 9 out of 10 things that they do have been good for the industry. I think this is what kind of differentiates the Indian regulator from an American regulator, because we don't have the whole system of lobbying here. In all fairness, I would say both the RBI and SEBI are extremely well run institutions which operate very objectively and without siding towards one party or the other, which in itself is a huge advantage because in the West, most often that is not the case. So the couple of things which might hurt industry and might hurt the number of new people coming in the short term, I think they're open to a dialogue and they'll rationalize with time.
Okay, fantastic. I think as long as they open,
Yeah.
and then also in the all space, as you mentioned, that the taxation on the category C is definitely still a sticky point and has been for.
Yeah.
I think
Yeah.
everyone who's been in the categories is hoping in the next budget sort of it comes through.
Yeah, I think it has to, Jay. Like, so much foreign capital is coming into the country. So much capital is coming into the financial ecosystem
Right.
through a Cat 3 AIF. And this one tweak will help the government make so much money in turn. And I think it's a no-brainer that it has to be done. And I'm hoping it happens in the next budget too, like you.
Yeah, sure, absolutely, absolutely. The sort of the next question is one of the most interesting ones, at least from our side. Throughout our careers, we've given what we call tuition fees,
Yeah.
right? We just sort
Yeah.
of paid the
Yeah.
market to sort of
Yeah.
give us a good amount of learning.
Mhm.
What has been that one sort of significant tuition fee, sort of in your career, Nikhil, that
Uh,
you would like to sort of talk to us about?
there have been many, Jay, especially in the beginning. I think my savings from the full-time job I had at 17 or something, I lost at trading very quickly because what did I have it? This must have been 2003 or 2004, 2003 or something like that. And I think I had this very tiny company that I had invested in. If I remember the name, it was Marsoft,
Ah,
a non-existent software company, which I bought at $4 and it went to like 20, $30. And I kept adding to it and then it went to zero. So there has been one. Off late, I mean, I have to look through my Instagram because I remember posting on that day, challenges make you harder or some nonsense like that, like,
right.
look, when you have a bad day, you look at these stupid quotes and you feel a little bit better. Yeah,
Sure.
but as you evolve, I think the one thing tuition fees really help in is you don't put all your eggs in one basket. You learn to diversify. You
Hmm.
learn to make sure that the max loss on any transaction is not maybe more than 1% of your portfolio or 2% of your portfolio. I think that has been the biggest learning from all the tuition fees paid over the decades.
Sure. Sure.
Yeah.
Yeah, sort of, talking of difficult times and tuition fees,
Mhm.
clearly a lot of people have felt a lot of pain in the last 4 or 5 months,
Yeah.
right? One of the things that always comes up is that, how do you control sort of your emotional quotient
Yeah.
and do not sort of, flit from one expert to the other, changing your view, or rather
Yeah.
giving up your own view to
Yeah.
sort of listen to the expert of that time?
Yeah. I think first it comes from a realization that nobody knows what will happen tomorrow, let alone an expert. I mean, you have to first understand that I can't predict which way the market is going. I can have an opinion of it, but there is no way to know with any degree of certainty what will happen tomorrow. So
Sure.
the only way for me to function is within a set of rules and a set of guidelines under which I will be very disciplined and not look at things like, mark to market and stuff like that. If I have a system in place wherein I buy companies in an industry I'm bullish over the next 10 years and I'll buy them at a 18, 19, 20 multiple, I should do just that and then just close my eyes and not pay attention to what an expert is saying, the short term numbers that come out. Do watch out for larger term trends in terms of what is happening with the industry, but at a company level I think you have to work like that, and not using too much leverage is probably the biggest advice anybody can get, and the biggest hygiene in any trading or investing system is you tend to stay rational as long as there is no leverage or margin involved. When you end up levering your portfolio, I'm talking about a retail investor and not a fund manager here, because we can't lever, right? We have rules and guidelines.
Yeah,
But to a retail investor, I would say don't use leverage as far as possible unless you're doing it to run hedged strategies wherein the max risk is capped and stuff like that. I think that and not looking at the mark to market on a regular basis is great advice for a retail investor.
okay, super. And sort of, we're almost coming to the end of this conversation, Nikhil. But if I had to tie you back to the first question that we asked, that, what motivates today's investor, and you mentioned it's always been alpha.
Yeah.
Where do you think the biggest source of alpha is going to come for the investor?
In the next, what, 5 years?
Take your pick. Let's call it 5 years. Let's call it 5 years.
Okay. I think, see, Jay, one of the big problems in India, I mean, we are facing right now is the really innovative companies that have scale are not coming to the stock markets like companies did traditionally. They're finding capital outside of the stock market, I think, from investors, PE funds, venture capital, whatever it might be.
Sure.
Something has to structurally change there to bring these companies onto the stock market. So a company typically probably loses 5 to 7% of the value of the company while they are listing based on, accounting fees, book building, all of that nonsense. I
Sure.
think the red tape around that has to reduce significantly. So these companies actually start coming into the stock market. Like, why did a Flipkart have to go the Walmart route or, the PE route? Right? Why shouldn't our investors, our retail participants in India have the chance to buy some kind of a stake in a homegrown bred here unicorn, which was, latest sold for $15 billion. I think
Sure.
that has to change. A lot of these new age companies have to come into the markets in India. Happens in the West, should happen here with a lag like most things, but hopefully it happens soon. Outside of that, if I have to pick a sector, I would say, uh, I would say what pharma would be the very cliche thing to say at this point in time because of what is going on. Somehow I would bank on airlines. I know it's really
Great.
unpopular right now. Traditionally has never made money, but they still have a use case. I like companies and industries where there is an actual use case. People will need to travel and people will continue to travel. We still don't have a better means of going from point A to point B versus an airline. I'm sure the industry will evolve in a dozen different ways, but I think that industry has a real use case and has been beaten down so much and has never done well in, I don't know, in my history of 10, 20 years, I have never seen the industry do well, not just in India, but across the world. I would, for some reason, take like a contrarian bet on airlines, I think.
Okay. Would you take a contrarian bet on the hotel industry or restaurant?
Yeah, I think hotel industry too. I think hotels will evolve into a completely different animal than we know them to be today. I don't think it will just be a place wherein uh, the distinction between hotels, co-living, restaurants, co-working, I feel all of that will blur with time. And you will have institutions which do all of the above. There will be a hotel, there will be a place where people live, there'll be a place where people work, they'll have entertainment at hand. I think consolidation in that space will create these really evolved structures. And I think hotels are at the forefront of benefiting from them.
Okay. Superb. And sort of, would you sort of, pin that down to sort of an obvious opportunity that you see right now, but a lot of people don't?
It could be. I mean, I could be proven wrong very easily, but just something to think about, I guess.
Okay, fantastic. So, Nikhil, we've reached the end of this conversation.
Hmm.
Thank you so much for your time. I'm sure, you have your platform to take care of and obviously make money for your investors at True Beacon. Here's wishing you and your team a fantastic 2020 for
Hmm.
what is remaining, and obviously a great more innovation to all of us from the Zerodha family. And sort of thank you again so much for your time.
Thank you so much. I love being here. Talk
Perfect.
to you soon.
Okay.
Cheers.
Thanks, Nikhil. Bye.